What do you look for when we come to pitch, or when businesses come to pitch to you? We know they are document part of it, and they are like, intelligent, emotional side, their mental side of it. But overall, what do you look at? What make you think that, okay, this is what me putting my money in and seeing what comes out of it? I would like to start with Mr. Deswa.
So I think for us, we look at a number of things. So we typically invest in what I like to call post-seed, pre-Series A. So we're looking for businesses that have already proven their business model. They have already, monetized the product, validated the product, have existing demand for the product, but they typically need working capital, OPEX funding to scale. So that's on the kind of the business side. On the kind of team, we want to see businesses that have a good bench. We don't like to invest in one-man or one-woman shows. So when you're at that stage of looking for funding, you want to show that you have a good team around you that can also execute. So we're looking for the team. We want to also invest in a business that has identified and understand the market that they're looking to scale into. So, what is the size of the market? What is this company's, competitive positioning? What's their barrier to entry? What's their unique selling proposition? How are they going to differentiate themselves from competitors? So that's also a big part of the market analysis that we do. And then in terms of traction, I think at post-seed, pre-Series A, you want businesses that are already doing we have a requirement at Arua. We want to see at least 300K to 500K of annual revenue. At this stage where we are trying to prove out the fact that you have existing demand, you're ready for scale-up capital. That's what we want to see at Arua. Other funds are different. So it's looking at the team, looking at the market, looking at traction through revenue, sometimes profitability as well. I would say about 40 to 50% of our portfolio have positive EBITDA. So we also look at, profitability and cash flow. And then in addition, is this team, do they have the bench to execute? Because what you need at pre-seed and seed is very different to what you need after that in terms of execution. So I would say investors look at a number of these things combined, but I think a silent thing that we don't talk about enough is also just your chemistry with the founder. Is this a founder that I want to work with? It's a very, very long marriage. We are typically holding investments for anywhere between 5 to 7 years. So is there a culture with this founder? Is this founder ready to learn? Is this founder ready to be a partner? Is he willing to take on, or she willing to take on advice? Are they willing to institutionalize? Our fund is backed by institutional investors that require certain different things than an angel investor would require. So are they ready to take on that feedback? Are they ready to institutionalize a board, bring in corporate governance? So the chemistry with the founder is something that is also very, very important and will influence the investor's decision probably even more than what it says on paper. So I would say, those are some of the things that we look for at Arua.
Thank you very much, Ma. I'd like to hear Mr. Shegun's perspective.
Companies in pre-seed, seed, Series A, pre-product market fit, post-product market fit, how you scale these companies and what it takes to scale these companies, you realize over time that it changes, right? So it's not like a one-size-fits-all solution. But generally what you look for, what we look for, what I look for is the resilience of the founders. In Africa, we're not building Uber for pets. We're building real businesses. Can I get an amen? Thank you, church. We're building real businesses, right? So resilience is key. For my thesis and criteria, how resilient are the founders, right? And just like she said, it's easy to tell a founder that wants to cash out, right? A founder that just wants to raise and just go buy a G-Wagon. And founders that actually want to build sustainable companies, real companies solving real problems, right? So resilience of the founders is key. How big the market is, the total addressable market. I think every investor, I don't say an investor that would ignore the term, right? You want to know how big the market is. That's how, am I really going to make much money there, right? And so if you look past the strength of the management team, the total addressable market, the experience of the founders, right? It makes a lot of sense. And this is where I think we got it right in Africa. I don't know if it's a copy and paste scenario, but recently, and I'm glad CredPal is here. Recently, you saw on LinkedIn, social media, they say PayPal Mafia, Paystack Mafia. Very soon we'll be having CredPal Mafia, right? But my point is, you have founders, they go into certain companies, they gain the experience, they see how it's done, they pull out, and they what? They do theirs, right? It makes a lot of sense speaking to such a founder than a founder that doesn't even have any experience at all, but just saying, give me the money, I'm going to make you a lot of money. I'd rather put my money on the one that has experience.